We think that Anadarko is a great asset, but you've got to put it in perspective. Occidental's about a $40 billion market cap, and they're buying something that's about a $35 billion market cap. And if you look at the debt, they're both $50 billion. So we think this company is simply too big for them. The market, we think, has it right. Occidental stock has moved down from 67.5 to 60. It doesn't like it. There is that $2 breakup fee. So when you talk about what Chevron has to bid, assume they have to bid about $2 less for it to be equal, because even if you take the Occidental bid, then you have to take off $2 for that breakup fee. But the net is we think it's a valuable asset right there. We think the best way for Occidental to maximize shareholder value would be to buy something smaller, say $10 to $15 billion, or even put themselves up for sale. They've got such great Permian assets and they're such a good operator. There are lots of companies that are very interested, and we'd rather get the 30 or 40% premium than have a 10 or 15% sell-off, and you've already gotten about 11% sell-off.
And David, I know you're the Occidental shareholder here, so I'm going to ask you about, the two other companies. So if Chevron's bid for Anadarko, does that make sense to you from a strategic fit? Is that the right asset? In other words, do you have an opinion on things playing out that way instead?
We do. We also own Chevron, and we like the bid from the Chevron side. And the reason that we like the bid from the Chevron side is Chevron's about 5 times bigger than Occidental. So the bid represents about 10% of the value of the company. So they're able to do it in an accretive way without risking their balance sheet. From an Occidental perspective, if oil prices move back down, all of a sudden their dividend might become suspect, their leverage might become suspect. You don't have any of those issues with Chevron simply because they've got such a much bigger company and a stronger balance sheet.
Occidental is, I'm told, a very successful and big operator in the Permian area, and that Anadarko's assets there are one of the things that attract it. Which would be the better fit, apart from any of the balance sheet things, apart from any of the spreadsheet stuff? Which would be the better operational fit? Oxy
Both companies argue that they're great fits. So Chevron says they're a great fit. They've got a lot of properties that are next to one another. Occidental says the same thing. So we don't have a strong opinion on that. They're probably both very good there. But the point is, people want into the Permian. And if you want into the Permian, Anadarko is a great property. We think Occidental also is a great property. Yeah. You've got companies like Exxon and Royal Dutch, so why not try to maximize
I can't imagine that there aren't other big players that would like to nibble around at some of the assets that are at work in the Permian right now. So my wacky question is, let's say Chevron doesn't get this company and Oxy does. Could you see a day where Chevron would buy to take over the two of them at once? They'd be big enough to.
They'd be big enough to, but not for some time. I mean, the great thing about the Chevron bid, it's a 10%. They're buying something for 10% their size. In terms of buying something 50% your size or 70% your size, that really is betting the company. And as we know, oil prices are very, very volatile. So we wouldn't be that inclined for anybody to make that big an acquisition. Now, whoever doesn't get the Anadarko, Devon has been repositioning their portfolio. They've got some very good shale assets. We think ultimately they could be in play. And there are a few others that would make sense for some of these larger players.